Hello, friends, and welcome to our weekly update. So, I'll just give you in brief what we are going to cover. So, to start off with, we will have a introduction or analysis on what to expect in the broad market, which is Nifty and Bank Nifty. Market outlook for the next week and the near future. We'll see all the sectorial indices, and we will analyze one stock where we see there is a trading opportunity going forward in the near term to short term, probably from the week's perspective. Let's start with our analysis on Nifty. In the last week, if you see, there was a range bound consolidation in the market. Neither both your indices, which is Nifty plus Bank Nifty, has gone into a consolidation, so there was not much of a movement in the marketplace. So all we are doing is trading within the range of the budget high and the low. So all the days with respect to post budget days are inside days. So once we have an inside day in the market, let's see what to expect on the upside or on the downside. Such inside days when break, it does gives us some uptick on the upside. So let's look at the structure in which the index is. First, if you see, the entire move is channelized. So what we are noticing, once prices are channelized, it tells us that the markets can see a swing both on the upside as well as on the downside. So when prices declined, it found support at the lower end of the channel, and now it is trading around the upper end of the channel. As a trader, we'll watch out for a generally what happens if we do get a channel breakout. We do see a strong follow up in price action. But over here, even if it breaks the channel, there are multiple resistance layers lying around 18,000 to 18,200. You have this high around here, plus you have the 50-day moving average, which is running around 18,100 mark. So if any breakout happens, we should see another 200 points of an upside in Nifty where it comes towards this structural resistance. So and if we see for the last 2 to 3 months, which is a medium term, it is a drifting down price action. So in the it's likely to continue in the near term also. So what we expect is some high volatility going forward. And as far as the traders trading view is concerned, the move which originated from the lower end of the channel around here can stretch all the way till the 50 DMA once the channel high at 17,900 breaks. So can it also come down to lower levels? For that, we apply our 10-day moving average, and the 10 days also the last price low on Nifty somewhere here. So the near-term picture for the market is till it holds above the 17,600 mark. The sideways price action can continue, and index can inch higher towards the 18,100 to 200 odd levels. So we don't see any start of a fresh uptrend right now. Why? Because its moves are channelized. It is below 50, and also the crossover of 20 and 50 is negative. See, at this point, there was too much negativity, which is represented by the emotions of fear. It hit this low, which was the middle Bollinger Band on the monthly chart, and we saw an uptick. So current rise is a pullback rally, in the context of the overall consolidation, if we see the higher time frame chart like monthly. So we are somewhere around here as far as the consolidation is concerned. In between, we can see sharp swings either ways, and such sharp swings are not substantial as of now. 300 odd points on the downtick on Nifty or 300 points uptick on Nifty. If you take 17,800 is your median point. Uh, on the upside, 18.2 is the levels on the upside, and on the downside, it is 17,500. Same way, if we see Bank Nifty, the 50 DMA is here, but Bank Nifty is even in the last one, 2, 3, 4 sessions and 5, all the candles are doji candles. What does a doji candle suggest is there is indecision. Neither buyers are confident, neither sellers are confident. Confident in the sense the activity is not dominant of any group. So intraday you are seeing it going up, cooling off, and then closes flat. So when you have such a market around this budget high, fine. As a trader, we wait for a clear break of this, or I'll take the lower end of the range for a downside breakout. If it breaks this low, we should come down and retest the budget lows, which is around 39,800 levels. So the choppiness and consolidation is likely to continue. Why? Because we don't have any decisive candle as far as weekly or daily is concerned during this entire weeks of trading. The entire weeks of trading can be summed up as a drifting price action in which uh, the momentum is fizzling out of the pullback, and if the budget highs are crossed, you can have a 2% uptick uh, where it meets very strong resistance. So the reward to risk in terms of traders is equal right now. There is no substantial upside from where you are buying, substantial downside. So we have a 300 points range in the bank nifty. So if I take the range, it is 300 on the upside, 300 on the downside, and continue to trade this range with the risk management in place. And as far as the sectorial indices are concerned, IT, again, if you see today, it dipped down at the open, it gapped down, but managed to close positive. So if I'm seeing the weekly chart of IT index, it is coming towards this resistance level, which is here. And IT over a medium term, there is no strength or weakness in the sense that it is just consolidating. So now it's happening till June. For the last 1 years, IT index is into a consolidation mode. And on a Friday, there was an uptick coming in the market from the reality sector, which can see a short-term upswing towards the levels, which is around 425 as a reality index, and it has built a base around here. And reality index has been underperforming for a while. I wouldn't say for a while, for a long period of time. The trend is obviously down, so all we are looking is an oversold reading on the daily price charts, which can trigger a minor degree uptrend, which from the current price is approximately 3%. So the market will continue to trade sideways with very high intra-week volatility. So rallies are to be sold into, dips are to be bought into within a 300 points range on the Nifty. That's going to be your trade plan for next week. Because if you have a market which has a 4 days of a doji candle or indecisive candlesticks, so it does not tell you about where the clean moves are likely to happen. So we'll have to wait for a break of the range. Let it close above 50 for an uptrend. Below 10 DMA, we expect that the consolidation to break on the downside. So very compact range. So here the trades will be more or less like a BTST or a swing trade, or such markets are great when it comes to creating your option strategy. let's look at stock of the week, in which I would pick up Reliance. See, Reliance has now gone into a base building. The short term trend is down, which is on the daily chart, but you are seeing a base getting built here. If I go to use multiple time frame and go to the weekly and the monthly charts of Reliance, if you see that Reliance for the last entire year, it is in this range. Around the lower end of the range is your buying opportunity where prices becomes oversold. So I'll take that level. Reliance can offer a good swing trading opportunity. So now I go to weekly. Around this lower end of the band, this candle is an ERC, an expanded range big candle. So I'll take 50% of this candle. So that's the trading opportunity in Reliance with the risk management levels around 21,800. And if you can see that this daily on the daily chart, Reliance, whenever is hitting this support from the higher time frame, which is weekly, which is a band of 2320 to 2180, it is giving this intraday pullback. And such a decline over the last 2 to 3 months have made prices oversold in the short term. So we can expect a move in Reliance or an uptick or an upswing in Reliance over in the overall context of a medium term consolidation towards 2550 or even 2500, which is the last swing high from where it declined. So Reliance is a stock which is basing around higher time frame support levels. So such stocks do give a pullback or a bounce towards the nearest swing high. So that's all, friend, in the weekly update. Before ending, the entire week was doji candles and indecisive candles, which was in a consolidation. So till 10 DMA is holding, the upswing is intact. The day we close below the 10 DMA, we should see market again drifting down. Or till that point of time, you can trade the range, which is the last low and the budget high. One side it has to break to give us a directional trade. So that's all. Thanks and have a nice weekend and a happy trading.